All right, so today is the day the jobs report that everybody was waiting for has been released. And gosh, the markets are reacting. Right now, it seems that we are heading for the worst week since April. So, what happened? What did the jobs report say that spooked traders so much? And also, we got to talk about tech stocks because Broadcom, AVGO, reported results and it's not looking good. So, there's a lot to talk about. And with that said, let's get started. So, welcome to Coffee with Marcus and Morgan. Today is Friday, September 6th, Jobs Day. And in this show, we are going to talk to you about what's happening in the markets and how we are trading it. And here we see right now the Dow hanging in there, down 0.3%, the S&P down 1%, the NASDAQ down 1.6%. I think, Mark, we need to jump to a 5-minute chart of the E-mini S&P to see what's happened here and what's happening right now, just as we start this show. Look at this.
Whoa.
Right?
I mean, a pretty big one bar reversal just out of the blue. It must be something that came out or was said because normally you don't get that type of reaction without some type of news. But interesting, Marcus, because we actually started the day slightly positive after that jobs report, which wasn't too hot. But it looks like traders just didn't really want to be long going into the weekend, the way that it moved throughout the trading session so far.
Yeah. So, I mean, going into the day, we were around 0.5% down. Then the jobs report was released right here. And at first, traders thought, yippee-yay, this looks good. And then right before the open, traders decided, no, it isn't. And if we look at a 5-minute chart of the S&P, we opened and have been sliding ever since until just a few minutes ago. But let's take a look at the jobs report and see what happened here. And I want to actually bring this up here from CNBC.com. So, August payroll. Actually, let's go to our comparison first on PowerX Optimizer. I think it's easier to see this way, and then we can dive in and look at it a little bit more. So, Friday, here we go. The non-farm employment change. Let's talk about this.
Yeah, I mean, we see that red number there coming in lower than expected, 142,000 jobs added. The expectation was 164,000. That 142 is better than last month's 89, which was a disappointment that kind of sent the markets into a tailspin. But Marcus, what we don't see here is that there were downward revisions to the June number and also July. So they actually cut July's number by 25,000 and June's numbers were cut by 61,000. So a little bit behind the scenes. Sure, this number was a little bit lower, but it just shows that there is a weakening job market.
Right. And so the initial reaction, because we saw that initially it was positive, and this because it looked like, okay, that's not too bad. Yes, it is a little bit worse than expected. But I mean, here we're talking about what, like 10% worse than expected, much better than the previous months. We also saw that the unemployment rate ticked lower as expected, and the average hourly earnings ticked higher, which is good for the consumer, right? And this is good for the economy. This is why I believe there was this initial reaction. But then, exactly as you said, there were some revisions. And once traders digested the revisions, this is when it started to go south. Basically showing that the labor market has been weakening for months. I mean, the revisions were made to the June report, to the July report, and the numbers that we got this morning was for the August report.
Exactly. And then that makes you wonder, will the August report be revised lower, right? And so I think it just turned into a situation where there was some uneasiness, especially going into the weekend, not knowing what to expect. There you have the numbers zoomed in. So not the best report when we look at the totality of it.
I think these revisions, they were just substantial. I mean, July, which was already much worse than expected, cut again by another 25,000, and June revised by 61,000. So from initially, I want to say this was probably closer to 180,000 down to 118,000. I mean, that's a huge number. That is definitely a big number,
Sure.
right? Now, this is what traders saw initially, that, okay, monthly job creations looking better, right? And then we also saw, okay, the unemployment rate is ticking down. This is why the initial positive reaction, but then like, oh my gosh, this does not look good. So very interesting. And this is where markets are sliding. So right now, have you had a chance to look into this? What's causing this little rebound that is just disappearing as quickly as it arrived here?
Yeah, I think it was because Fed member Waller said that he's backing a rate cut at the September meeting. So that could have just get him getting on board with that and sharing it openly. He didn't say by how much, but he said that the time has come for adjustments.
Yeah, but I mean, come on. This is what we are already expecting. Let me just refresh this here so
Yeah.
that we see the numbers, right? I mean, this is what everybody is already expecting. A rate cut is factored in by 100% probability. And right now, the question is by how much? And we see that with this bad jobs report and the revisions to the previous month, we are now at almost a 50-50 cut for a quarter point cut or a half percentage cut.
Yeah. Now he did say he's open to the possibility that it may need to be aggressive in keeping the labor market afloat as inflation moderates. So maybe just there was some wording there that traders got excited about. But you're right. It seems to be a bit of an overreaction right now, just because we pulled back, gave up half of that initial surge.
Right. I mean, looking here also at interest rates, I mean, this would actually make sense because interest rates are falling today. The 2-year yield down by 3% right now, trading well below 3.65. The 10-year fell below 3.7, down 2% for today. So, I mean, this were it just a very broad sell-off. And the weakness from the tech sector doesn't help at all.
Yep. Yep. I mean, we kind of see it everywhere. Sure, there's some green in healthcare there, but there is red not only in the stock market, but we see, cryptos down, crude oil's down. It's just really a red day, except for the VIX.
Yeah. And I mean, in the tech sector, we had Broadcom reporting earnings, AVGO, and AVGO down almost 10% on earnings here. So let's talk about it. What happened?
Yeah, so AVGO reported earnings, and they actually had a nice earnings beat. So Broadcom, they said that they had an earnings beat. They also had a revenue beat. So for this quarter, things look pretty good. But they did share some fourth quarter estimates on revenue that came up a little worse than analysts had expected, and I think that was really the issue. And there were some comments about their AI chips and how it compares with Nvidia, but I think it was that fourth quarter estimate that really sent this lower. I actually was looking at this for a possible earnings play,
Yeah.
doing a wheel on this.
Yeah, we'll look at it in a moment. But right now, yeah, we see Nvidia down 4%, Broadcom, AVGO down almost 10%. We also see that Tesla giving back the gains from yesterday, down 5.3%. And the selling is just very broad. We also see weakness here in the financial sector. So American Express down 2%, JP Morgan down 1.2%, Bank of America 2%, and Wells Fargo 3.6%. So we see that a few sectors are kind of mixed, but the big ones, as we see at the tech sector, the communication services, and also Amazon and Tesla, all of the Magnificent Seven here right now down, dragging down the market. And yes, this is where the NASDAQ right now leading the pack lower. The NASDAQ down 2% right now S&P down 1.3%. And if you look at a 50-day moving average, it didn't help the S&P today. It has acted as support over the last few days, and today just boom, moving lower, slicing through right now, approaching the 5,400 level.
Yeah, and right now we're looking at the worst week in a year. The worst week of the year came in April, where we were down about well, it was actually 3.1%. Right now for the week, we're down 3.8%. So not a good week.
Right. But I mean, here's how I see it. I see this as a buying opportunity. I
Oh,
mean,
sure.
very similar to what we saw here. There's another buying opportunity. And talking about buying opportunities, let's talk about our win the fear strategy, the WTF strategy, where we do exactly this. We are looking to buy stocks that are showing an overreaction. And first up, we did have a few days ago already CEG, Constellation Energy Corporation, that we decided to skip because we don't have enough data. But right now, trading 2.3% below the original entry, it's definitely something that we are considering right now, especially as we're approaching the 200-day moving average here, which always or often acts as support, as it did recently here.
Sure, and I mean this is where the signals that have occurred with the 2.5 years of data that we have for this one were positive. Like it did very well identifying opportunities based on the strategy. But we decided to pass, maybe consider it as a OBE, an open below entry. And yeah, this one is definitely on my watch list.
Yeah. And then we had a new signal today, AstraZeneca, popping up this morning after yesterday. It seems that some news might have sent them lower. So yesterday, a big drop. And this is exactly what we are looking for with the win the fear strategy, the WTF strategy. And at first, after we entered this morning, at first it was moving higher, doing exactly what we expected it to do. Right now, with the overall weakness in the market also moving lower, so we entered at around 84.02. I was actually able to get an entry a little bit better at 83.92 or 96. You were right there at 84.02, right?
Exactly. So you had a nicer entry, a nicer fill than I did. But I mean, this one, the stock's still positive for the day, but because it opened higher, pulling back just a little bit from that open. But I mean, to me, a nice opportunity. I like the chance to take another WTF. And with this broad market pullback, I wouldn't be surprised if we have a couple new signals on Monday as well.
Yeah. All right, talking about the wheel. Okay, you actually hinted at that you were looking at AVGO at Broadcom as a possible wheel candidate here. So talk about this.
I was. So I traded AVGO earlier in August, and I was able to sell the 125. Thought that that was a nice level based on that range that we had for the end of January until mid June. And today, with this gap down and maybe some support around 135, 136 ish, I was looking at the 127, 128, thinking that this might be a decent candidate to take advantage of that reaction to earnings. Because again, their earnings were good, and even on that fourth quarter guidance, I guess you could say, it was just slightly worse than analysts expected. So I think that AVGO is still solid, but this is where I actually took a look at the other stocks in this sector, and there you go, Marcus. So we could see which stocks are going to be moving similar to AVGO and also which stocks have weekly options there. And this had me looking at a few others like Qualcomm. I looked at MU. I looked at Skyworks, SWKS, and I looked at ON. And I thought ON looked pretty good chart wise.
All right, so that's a cool thing that we see everything here at a glance. We can just click on ON. for a very quick comparison and see here. Yeah, this looks actually really, really nice. So the key question is, did you take this as an opportunity?
I did. I did. I mean, there's a nice low PE ratio, profitable company, and I just thought this one looked pretty solid. I was able to sell the 65 put, get 60 cents there, which is 42% annualized. So selling that put for next Friday, I thought it was a nice opportunity chart wise. Right now, the 64 is available too. But yeah, the 66 at the time worked for me, or the 65. Sorry.
I like it. I mean, this looks like a great opportunity. And again, looking at the low PE ratio, looking at the income statement here, both quarterly and annually, looking really good. So I think that this is a super solid candidate. I'm right now full, so I did not join you on this one. But since you did not trade Merck and KSS, you had an open slot. And yeah, this is definitely a good trade.
Yeah, I'm liking it.
Loving it. So, I mean, this is where we thought today we do something different. We walk you through a trade, walk you through how we identify candidates. And I mean, this is where, again, we can just take a look at the heat map and see, okay, which candidates are massively down, which was here AVGO. And then after clicking on this, we can also see, okay, what else is going on in this sector here. So, what is another possibility? And you looked at 4 different charts, and then you just decided, all right, ON is actually looking the best. And I know that, oops, got to bring up ON. Both you and I talked briefly about it, and I like this chart a lot. Super solid support here, anywhere between 60 and 65. And we like to be a little bit more aggressive because assignment is a good thing. If we do our
Sure.
stock selection correctly, we want to get assigned here.
Sure. And Marcus, I took those exact steps that you just showed, going to the heat map, seeing what's down the most, and realizing that the AVGO had earnings, but it was just easy to identify with the heat map, and then looking at stocks that were similar. Because I thought AVGO was decent. AVGO does have a higher PE ratio, and then that's where the PE ratio was much lower for ON, but also just ranging a little bit better, in my opinion.
Yeah. If you like this, that you see how we are approaching this and how we are walking through this, give us a like. Then we know that this is something that you want to see more of, and we will show you more of this, how we are looking at the charts, how we are going through our selection process to take a trade, not only find a trade, but also ultimately also take a trade. All right.
Yeah.
Now, we got to take a look at the markets again, because what's going on here is kind of crazy with this rebound, this slide. And before we do, it is Friday, and it is the time in the show where we do have a dead look for you. So it seems that yesterday, Mark, I beat you. So what do you got for us today?
I think you did beat me, Marcus. So I can't say that this is any better than yesterday, but what do you call a line of rabbits marching backwards?
Jeez, I don't know.
A receding hairline.
All right, all right, all right. And even though we didn't coordinate this, I also have a rabbit joke today. What do you call a rabbit with fleas?
What?
Bugs Bunny.
Bugs Bunny? Okay. Hey, there was the Philippe Philop yesterday. What do you call a guy wearing sandals with 2 left feet? Flip flips. Wait, I messed that up. Forget it. I totally messed that up. But oh gosh, Marcus,
All right. Well, let's
we'll
take a
leave
look
it
at
at
the
that.
markets. Look at this. After this quick rebound that looked like traders are seeing a buying opportunity right now, as you said earlier. Seems that traders don't want to be long going into the weekend. And I mean,
Yeah.
just looking ahead of what's happening. So we do have the Fed meeting coming up in only 12 days. So this is not the upcoming week, but the week after. And looking at the economic calendar here for the following week, we have one more important data point for the Fed to consider, because next week we do have the CPI and the PPI numbers. And right now, traders with this week report here are betting on a 50-50 chance. I mean, first of all, 100% chance probability that the Fed will lower interest rates. And we heard it this morning from a Fed member. And the question is by how much? And right now, it seems that both is on the table, a quarter point and half a point. Right now, the slide is continuing, and so far, look at this. The NASDAQ trading at session lows, the Dow at session lows, the S&P at session lows, the Russell at session lows, and the VIX trading at session highs, the fear index. Not surprising here.
You know what this means, Marcus?
What does it mean?
WTF Monday.
WTF Monday, for sure. So you don't want to miss this. If you enjoyed today's show, give us a like. Let us know in the comments after the show is over what joke you like best. And then make sure that you subscribe, because you don't want to miss Monday's show when we talk about WTF opportunities, because we should have a bunch to choose from. And with that said, have a great weekend, and we'll see you again on Monday.
Happy trading, everybody.